Hey everybody, good morning, happy Tuesday. Welcome to the morning show here on Stock Market TV. I'm Spencer, I've got Steve, I've got JC, I've got Alfonso. Hope everyone had a good Monday evening. Hope your Tuesday is off to a good start. We got a lot to discuss today. Why does it seem like fewer and fewer stocks are going down? And also, by the way, how many days in a row has the NASDAQ risen now? This is a little bit of a winning streak. What was it? The longest streak since January for the NASDAQ? That's cool, I guess. All right, guest today, Todd Sohn. You know him, you love him. He joins us every single month. He is, of course, the ETF and technical strategist at Strategist Securities. He'll be on at about 9 o'clock. And you know the drill, and with Patrick as well. So hit that like button and let's go to work. It is the morning show. Where's my intro? Come on, intro. Play for me.
Oh, what is happening, my friends? We have a question. What is the right time for a grown adult to have breakfast?
You know, JC's trying to shame me in the back VIP room over here.
VIP room.
Survey in the chat. So just ask the chat. When do you eat breakfast? When does everyone, if at all?
When does a responsible, healthy adult male that is not mentally challenged, right? This is an adult male with good mental and physical health. At what time should that person eat breakfast?
What time do you eat breakfast?
In other words, at what time should that person break fast? Let's remember, hunters and gatherers back in the day had to go hunt and gather in order to get the food to then eat before they were able to break fast.
They had leftover berries from the day before. That's what they would eat for breakfast.
That is such bullshit. You know very well that if you got a basket of berries and you got the munchies, you're going to eat them all.
Okay, I'm seeing 7 a.m., 11 a.m., noon, coffee at 6 and nothing else.
Look at all these no breakfast Nazis out here. Listen, breakfast is the most important meal of the day. I need to get something in me.
And who told you that? The cereal companies? Are they the ones who told you that it's the most important meal of the day? First of all, and I agree, it is the most important meal of the day. When you break fast, you don't have to have a sausage, egg, and cheese at 7 o'clock in the morning for breakfast. That's stupid.
Well, I'm not fasting. This is 2023. This is America. I'm not, there's no reason for me to fast.
That's right. And this is America, and I have freedom of speech, and I can break your balls all I want. Am I wrong?
I usually don't eat. I try not to eat before 11:30. Or noon, ideally.
My breakfast was delicious.
Yeah.
I'm sure it was.
I'm ready to go.
Well, I mean, just because you're not eating doesn't mean the market's not going. The market's going all the time. So should we get into that?
I want to talk about some Uber.
That was my week.
I feel like you want to talk about Uber every day. What is there left to say at this point?
Not much.
That was my weak attempt at a segue. Let's do the state of the markets.
You know, there are people on Twitter, believe it or not, who are not good at this, right? You know, this whole counting thing. They're just not good at counting. Like they tell me things like, "Oh, JC, the sky is purple." It's like, no, bro, it's not purple. Like, you know, like I can't even like address this. So when Stinky Monkey 69 is tweeting at me about, you know, how market breadth is not a leading indicator, I'm like, it is though. It is. So Stinky Monkey 69, you know, go back and count again. Can we go look at slide 2 here? A couple of good slides. We've been talking about the new 52-week lows list on the world's most important stock exchange. Peaked on October the 3rd. That was over a month ago. But I want to, you know, it's the world does not revolve around 52 weeks, right? I think that looking at market breadth on multiple time frames is really, really good exercise In this particular case, it's telling you the exact same thing just because of kind of where the market has gone over the last 52 weeks, but it's not always the case. So I would encourage people to look at the 1 month highs, 1 month lows, 3 month highs and lows, 6 month highs and lows, right? So here, when we talked about the new 52-week low list peaking on October the 3rd, what do you know? So did the new 6 month low list. And if you go to the next chart there, Mr. Spencer, so did the 3 month low list. And if we add the 1 month low list, that also peaked as well. So just really, you know, a weight of the evidence sort of approach to market breadth is probably best, and incorporating multiple timeframes. Shout out Brian Shannon, author of Technical Analysis Using Multiple Timeframes. Breadth analysis is no different. We have the advantage to be able to incorporate data sets of multiple timeframes, and most people choose not to. I really don't know why. Maybe it's laziness or ignorance, but neither one of those are a valid excuse. The data is there. I think that we should use it to our advantage. How do you feel about that, Mr. Strazza?
Breath was mixed. You know how I feel.
Breath was mixed, but now it's not mixed anymore.
There weren't divergences like this everywhere, so I just don't think it was as obvious as some other signals we've gotten from our breadth indicators in past cycles.
Yeah, like the Nasdaq had more new lows, for example.
Right. Yeah.
Yep. But if you're gonna lean on any data set, wouldn't it be the New York Stock Exchange?
I guess.
You know, I always have, and I'll tell you why, because I didn't used to. And you know, the best thing that I can encourage people to do is just talk to old people. Find the oldest people you could find and just talk to them. Ask them questions. Ask them about the 50s. Those are the best stories, by the way. If I had to go back in time and live any time, the 50s sounded like a pretty good time. But go back and, you know, the old timers will remind you that the New York Stock Exchange is really where you want to look. Not the S&P 500 specifically, particularly when it comes to market breadth.
Can you imagine drawing your charts with a pencil on graph paper like they did in the 50s, though?
Mad respect, though. Respect.
Crazy.
No?
We couldn't do what we do.
We could. It would just take us a lot longer.
We would need like a massive team of people to look through.
Yeah, you want to know something? But it's like that. It's like that in a lot of cases. Like you talk to, speaking of old guys, Barry Ritholtz. See, catching a stray there, Barry. Love Barry. He is the blog father after all. And Barry tells you stories of the 90s when he would spend an hour writing a blog post and then spending another hour coding it on HTML on GeoCities.
That's crazy. It's crazy.
Think about that.
Yeah. I mean, dedication. I wouldn't
talk about dedication. I mean, it worked out for him. They manage $4 billion now. You know, Barry got his corner office overlooking Bryant Park. So, you know, Barry's winning. Right? Shout out Barry. He's actually going to be at dinner in January, by the way.
They just opened a new office in Charlotte. I was looking at Josh's Instagram this morning.
Did they? All right.
Yeah,
Charlotte's cool. It's all right. I like there's a chicken and waffles place in Durham that's unbelievable. So next time you're in Durham, let me know. But anyway, so the improvement in market breadth we've seen for quite some time. So Stinky Monkey 69, I hate to break it to you, it's been a leading indicator for quite some time. I want to talk about the minor leaguers before we move on. You know, this is front and center. The Perma Bears keep pointing to the underperformance of small cap stocks as a reason to short everything, and the world's coming to an end, and financial crisis, and all these things that you hear that you've been hearing since last summer, by the way.
There have been good looking charts in that universe through the entire bear market, all this year, all last year. Like as bad as the index has been, you know, we're looking at stocks from 1 to 4 billion. There have been plenty of good setups, and I think it just makes like that leadership stands out even more, right?
Well, two things on that front. Number one, these smaller cap stocks, you know, overall have a lower correlation with large cap indexes than a large cap stock in those indexes. That's number one. Number two, because these are small caps by definition, there's less to go around. So when institutions are piling into these smaller cap stocks, right, the cream's going to rise to the top. Like the relative strength is, you can't ignore it. Like it can't hide anywhere. It stands out. It really stands out even more so in small caps because, like I said, there's less to go around because there's so little. So when these institutions are piling in, they're really moving big time. So let's just remind everybody that this is a long-term uptrend in small caps, by the way. And then here's the latest minor leaguers scan. These are, we're talking about, people are talking about how the Russell 2000 is near new 52-week lows, and it is relatively near new 52-week lows, but all of these are small caps that are near new 52-week highs, all-time highs in a lot of cases. So, let's remember that just because the Russell 2000 is underperforming in a bull market, which, by the way, happens in most bull markets. So this is no different. Just a fun fact. People hate to study history, but this is actually perfectly normal. And I don't want to give away too much because we do run a research shop here and people pay a lot of money for this stuff. But I do want to show one example of a stock that comes out on this, and this is ARCB. This is a trucker.
Oh, okay.
ARCB.
Yeah.
How do you feel about that, Strazza?
Should show the other one.
What is that? New 10-year highs relative? Just show this one. We'll show just one. Look at that. New decade highs relative.
And just about new all-time highs on an absolute basis. I mean, this one, it reminds me of Old Dominion when you zoom out. It's just been incredibly strong. It looks good.
Who knew? Truckers, huh? How about that? It looked great. So, again, just as a reminder, it's not about this stock or this cycle, just in general, particularly in small caps. You're going to see it across the cap scale, but particularly in small caps, you're going to see relative strength, and the cream really does rise to the top.
And just to like a really quick look at the table, which I always do as soon as we run it, gives you insights into kind of the groups that you want to be paying attention to.
So what stands out?
What stands out? In this one, it was education and training. You got a lot more
REITs than you'd think too.
It's been the case. Pat's been on that. Pat's been on these leadership REITs. But the education and training services stocks, I mean, these are stocks that most people have probably never heard of. Learn, that's Stride Inc. now. It used to be called K12. Lope is Grand Canyon Education, and this ATGE, Actilem, whatever. The Chinese education names also very strong, right? So we're seeing that trend around the world. And then another one is these teeny bopper apparel retailers, as Spencer would call them. American Eagle, Abercrombie and Fitch. These stocks just keep working.
No. That's not what I call them. That's what they are called.
I learned that from you, so I'm just giving credit where credit.
Okay.
But the charts just continue to trend higher on these mall retailers, which is interesting because I thought malls were dead, but apparently people are still going to American Eagle.
They are dead like 10 months out of the year, and then the other 2 months they outperform, right? So go figure.
People still talking about breakfast in the chat. How great is that?
Breakfast is the most important meal of the day, brought to you by the same people telling us that carbs are your friend. Yeah, that's right.
I went for a walk this morning. Like, let's
me too.
Positives. See?
Me too.
We're walkers, morning walkers.
Oh, yeah.
Great.
No doubt. No doubt.
It must be nice not having any kids, and you could just wake up and go for a walk.
Here we go again. Can we start counting how many times JC mentions that we don't have kids, Spencer?
I'm just reminding you, enjoy your morning walks. Enjoy them while you have them.
Like,
just a reminder.
Like, if you have to drink when Strazza says thrust, then you also have to drink when JC mentions that he has kids and his life is hard.
All right, this is what we'll do.
I didn't say my life is hard. I just says yours is particularly easy.
When I move upstairs to my office and I have all my bells and whistles at my disposal, we can have like a little sound effect every time he says kids. We just press the button, right? Yeah.
Enjoy your walk. Okay. Enjoy your peace and quiet in your walks, guys.
I would love to start using the soundboard. We've talked about this a million times.
I have it. I'm not. I'm at a. Okay, that works too. Yeah.
Yeah. I want to start pressing buttons. All right, Uber or Todd Sohn? Where do we go from here?
Todd.
Let's make sense of Uber before Todd gets here.
Yeah.
Why should any of us give a shit about Uber, Strazza?
Spencer, you want to read the headline?
Yeah, I'll read the headline for you. We have been seeing a lot of earnings beats this quarter. I don't put a ton of stock in that because it could just be the analysts being wrong and yeah. But in any case, Uber's report this morning was you can call it mixed, right? You can call it mixed. Their sales came in higher. Their EPS came in more or less in line. It was actually like a smidge lower. And their guidance was, I think, it was okay. I don't think it was like knock the doors off amazing.
Well, their guidance beat the estimated guidance, bookings and EBITDA. So what's the problem?
Yeah, okay, you're right. Adjusted EBITDA 1.18 to 1.24. Gross bookings around $37 billion. All right, yeah.
The stock's down 2%. So
that's a very that might as well be flat, right?
So they missed on top line though, right? Let's talk about that. They missed on a couple $100 million.
Did they miss on the top line? I'm seeing a beat.
I saw a miss. I saw 9.2 versus 9.5. It was a miss, trust me. So listen, the reason why they missed is due to a business model change in mostly European countries that makes them recognize sales and marketing as contra revenue expenses. If you remove the accounting change, 4% revenue beat. This is why these things are hard, right? That kind of stuff happens all the time. So it really was, if you adjust for same accounting, then it is a beat, slight beat. They beat bookings by 2.3%. They beat EBITDA by 7%. And then they beat their own GAAP EBIT guide by about 30%. So everything's looking pretty good for Uber. I think the most interesting thing about them, if I could just read a little bit from the report here. They have investments in all the other ride-hailing companies. I'm trying to find the graphic here.
Oh. Okay.
So Uber owns 12% of Didi, 14%.
What's Didi?
Oh, what's Didi?
14% of Grab, 22% of Aurora.
Oh, are these Asian Ubers?
Grab and Didi are. I don't know what Aurora is. You heard of it, Spencer? No? Okay. 4%.
No, I have no idea what that is.
Aurora is Sleeping Beauty's actual name. She's Princess Aurora.
That's not the Aurora we're talking about. And then is Lime the scooter company?
I think so.
That's trash. But anyway, Didi and Grab together, it's like $4 billion in equity stakes. So it's not nothing. Think of the data that Uber has about people. Come on. What?
No, it's hard. Come on, everyone's got the data, right? I mean, I've been hearing about the data. What was the company? It was a SPAC. Waymo. It was like it's going to be like the Google for automotive data, right? They had all the smart car, interconnectivity.
Wasn't that a Chinese scam company?
No, it was not a Chinese scam, but it may have been a scam. I mean, it wasn't a Chinese scam, but I've been hearing about data for years now, and Bumble has data, right? A lot of good that's doing them, right? So I don't know.
I think Uber's data is pretty unique in the sense that they know exactly where people are going. Company's trading at like 2 times forward sales estimates. It's not expensive. They're a cash flow machine. They got $5 billion or more in cash and cash equivalents. Everything's looking good. What's interesting about them is they really only make money on mobility. It makes up like half of their revenue, but the majority of their earnings. So that's the actual ride hailing. The delivery and freight, they're not making too much money off of, but it's a platform play, right? It's an ecosystem thing. And they talk about that. I was listening to the call this morning. 40% of people who come on to the platform, download the Uber app, like for a ride or whatever, will use another Uber service. So they're just trying to get everybody into their world. And then it seems to me as though Dara's very creative and open to different ways to monetize that.
Can you throw up? I like how you're on a first name basis with the CEO. Can we get?
I can't say his last name.
Can we get slide 2 up, please, Spencer? Yeah. I don't know. How do you feel about that? I like my chart better, Strazza. No?
Why are you talking shit about Alfonso? He's not even here to defend himself.
I'm not talking shit about Alfonso. I'm just telling you that I like this one, this look better. I think this kind of reiterates that 48 level, which I think is a big one, no?
I think new all-time highs in no time for this one. Doesn't it look like some of the best tech stocks? You could overlay Meta or Google.
And what are these yahoos? Is software? Bullshit. Why? Because they use software? You know, like doesn't every company use software? Like, are we a software company because we use software?
If you go to another data provider, you'll see it listed as a transport. They're just doing their best, JC.
Who lists that as a transport?
On my quarter app this morning, I saw it listed as a transport. On TradingView right here, transportation, other.
Interesting.
So
I mean, I'm with you. It seems like a transportation stock to me. I mean, I'm no expert. I sure as hell use Uber a lot. I mean, I have over the years.
Just 2 more points. So from like a bottom line perspective, their cash flow machine, their EBITDA doubled year over year. Talking about like 560 million. So now they're making over $1 billion EBITDA a year. And really exciting from more of a technical perspective, there's going to be a lot more demand for this stock in the future because S&P 500 inclusion is coming based on these results. How do you like that, sir?
Yeah, I mean, I don't know. I'll defer to you. I mean, all I know is that if it's above 48, I want to own it, and if it's not, I don't.
I'm into the Uber. I'm long. Let's go.
I think I think you've made your point. So, all right. Why don't we bring in Mr. Todd Sohn, fan favorite, host favorite too.
From an undisclosed room. And Spencer, Strategas.
Strategist, what did I say?
Spencer likes to give it that accent. Strategas.
All right.
Strategas.
Okay.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Oh, Mr. Todd Sohn.
Right.
Todd Sohn.
I hope this is better.
What'd you do to earn a corner office, sir?
I'm in our media room because I got so stressed out about the audio issue that I constantly have that I just skedaddled in here. It's locked.
Yeah, you don't have to tell the guys behind you to shut the hell up. Like, you could just kind of, we can talk about markets like adults, right?
I work in the clown corner in our office. So I said, let me move it. I got these AirPods now.
You were fancy, buddy. You are.
If these don't work, we're gonna short Apple.
Todd, quickly before we get into this shorting Apple, tell Strazza and Spencer were bragging about their morning walks earlier today. Why don't you tell them to enjoy it while they don't have kids? Can I get a witness here?
I mean, there's nothing more exhausting than children, as much as the pleasure they are. I'm sure you enjoyed your morning work. I had to go to the gym at 4:45 in the morning. I mean, this is what I got to do.
Todd, that's gangster right there, Strazza. Ask Strazza what he was doing at 4:45 in the morning.
I was up
reading the Uber 10Q
listening
or 10K,
to the Uber conference call.
Didn't drop until like 6:45. I was sitting there waiting, refreshing my quarter app. Todd, you're a big walker though, if I remember correctly.
Walking, running. We just had the marathon here in the city. It was awesome.
Did you run it?
I did not run. No, I didn't run. I'm semi-retired. I ran 5 and 10 years ago.
How come you don't call me on your walks anymore? I miss you.
I don't really do the walks anymore.
Oh,
Too many kids.
That's point for JC.
Too many kids, and I'm in the office. That was when I had to get out of my apartment for my sanity.
Yeah. All right.
In the after times, the dark.
All right, so guys,
it's a bull market, Strazza. We got to be in the office, right? Yeah. Todd, tell them.
I like being in the office. I can't be in my apartment all day.
Mr. Sohn, would you agree that market breadth tends to be a leading indicator for the indexes?
Yeah, I think that makes sense because especially today, right? You have the top 5 stocks are at 25% of the index. That's a new high. Microsoft's 7.25% of the S&P 500. And so they mask a lot of either the A, improvement or B, the deterioration.
Right, agreed. It goes both ways. I've tried to remind
people.
It
it totally goes. It goes very much both ways, and you can see that at certain tops. And I think here you're trying to see it get a little bit better.
Well, didn't the new lows list on the New York Stock Exchange peak on October the 3rd? Is now November the 7th?
Yeah, I think the bar is really low for non-mega cap growth to move higher.
Yeah.
Financials, listen, financial trends, they don't look great. Banks don't look great. But
capital market stocks do, a bunch of them.
Insurance is good. Yep. Private equity, the capital market type names are good. But I think the bar's really low for a little bit of an upside surprise. Doesn't mean the banks are going to go back to new highs or small caps can go back to new highs. But I think the setup is there. You have some pretty good lines in the sand now for the next 6 to 12 months, whatever your time frame might be.
Which is the same line in the sand that we've had the last 6 to 12 months.
Yeah. And then last week you had a nice little response, whether that was some sort of junk rally, short cover, whatever you want to call it. Another line in the sand was made. And you're just trying to build.
It also reiterated a lot of prior lines.
Yeah, exactly. I like that small. I thought in my dreams the playbook was small caps break down and it turns into a huge move higher. Everyone, sentiment gets way off size and the negativity, but they held. And so let's see if they can build from here.
Well, technically they did make new 52-week lows, didn't they, on the IWM?
If they did, I'm
maybe for like 10 minutes or something.
No, yeah, for like 1 day. Yeah, it did. There's no
I'm thinking more of like a good week.
Yeah, it was less than 24 hours. Yeah. Look at the futures market.
Too fast.
You didn't get the breakdown. They came out and defended that level again, which is crazy because we say things like technicians, as the more times the level is tested, the more likely it is to break. I mean, that level has been on its last leg for a year now, and it just keeps holding.
Yeah. I mean, small caps have been sideways for a year. They're in a 30% drawdown or something like that.
So you're going to short them now?
Yeah. It's if they went down another 10%, you're getting into rare territory in terms of drawdown
and the divergence from large caps. The performance.
Yeah, I mean, that's just the matter of those big names doing whatever they want to do. So probabilistically speaking, all right, you're down 40. If we made a new low here, how much more is there to go? You're talking like nuclear bomb type drawdowns.
Todd, what do you make of, a lot of talk about best week since, best couple of days since? Did you look at that as like any sort of signal in terms of momentum on like a rate of change indicator?
I liked the rate of change. I'm more of like I don't love 5-day rates of change to 10 to, I like a good 1 month, 3 month type thing to really get credence to the move. Yep. But the breadth skews were really good.
Yep.
Right. And that's been a little bit of a missing ingredient since March or even last year, October of last year.
You're talking about just the participation at the end.
Overall participation, not just mega cap growth.
The most beat up stocks experienced by far the biggest bounces.
Yeah, and so I think you can look at that as A, short covering, or B, maybe that's a change in risk appetite.
Right.
That's the stuff you need to start moving to get the overall breadth skew numbers working. So last week was a step in the right direction. I know we can talk about all the different breadth thrust signals and they're maybe flashing.
Yeah, what do you make of those? But how do you guys?
I can never.
It's the thrust Whaley Sohn breath.
You got to trust the thrust. Trust the thrust. I think Ned Davis said that back in the day. I'm looking at 1 month highs, right? When 20-day highs start to really expand, you get above 40, 50%, 60%. That is okay. This is a real deal type move.
Yep. Can you give us a couple of examples of when we saw that? 2020,
2009, 2020. Yeah, off of every
any
major
less
low
obnoxious examples?
So what are those indicators?
What about like 2016 was a good one.
When in 2016 did that register? In the spring?
I want it. Oh yeah, I want to call it March. Even
that early? Was it that early?
I think maybe I'm off here.
Because remember, we bottomed in January, and then Europe, Japan, S&P Dow retested in February. We ripped from there into the spring, and then consolidated May, June, and then I went to Mexico. I came back. We broke out in July. I mean, I remember I remember what book I was reading, what I was drinking too much of, right? I remember.
That was a contentious year because you had the China driven correction in late 2015. You had to deal with the Brexit thing, right? That was
Aren't we always dealing with that?
Oh yeah, yeah,
it's
just
like a regular.
Tension. And then the every 4 years the election, just tension. And then once the market gets beyond that tension, it usually just explodes higher.
And then I remember going into that Trump election, a ton of strength during a seasonally weak period. I remember small caps were actually up during that period going into the election. So that fourth quarter rally was already, you know, they already showed their hand, right, going into that.
And they're trying. My only problem with small caps is it's just such a junky index right now.
Yeah, just right now or always.
Always, but more prevalent now that rates have been going up. Like the flaws are really coming out.
And they're the least relevant and least important companies on the planet, and they're always kicking out their best players. No? What am I missing?
Yeah. It's the inherent flaw with a small cap index. Now, if you can find some great companies early on there and take advantage of that. But like you said, they sign somewhere else. It's like going up youth soccer, then high school, and then the pros.
And then think about the fact that people are like, oh well, Apple is bigger than the entire Russell 2000 combined. My argument is you better get used to it because there's going to be a lot more of them because these companies keep getting bigger, but the Russell 2000 ain't ever getting bigger.
Forget Apple. JP Morgan's bigger than the entire regional bank index.
As it should be.
Market cap. Yeah. So, I get we can use this as a risk gauge or an economic gauge,
I don't think we
but
can.
it's also very flawed.
Very flawed.
So
we
flawed.
Can't, is your point. Or shouldn't.
I mean, traditionally now, especially now.
All right. So credit spreads remain tight, right? The credit markets continue to suggest that the world is not coming to an end, right? Anything in the credit markets that concerns you for equities?
I don't see it. I think we all look at the same spreads, which might be a problem. If we're all looking at investment grade spreads, high yield spreads, I don't see anything there.
They're as tight as they've been all year. What the hell are these people so scared about?
They haven't moved in months. I feel like I keep playing with these headphones, by the way. Sorry. The only interesting thing to me, I have to check up on it, was US CDS was popping up again, but I think that has more to do with the craziness in the capital than anything. That's just like a signal of underlying debt stress, whatever you want to call it. But corporate spreads, nothing there.
Nothing. Or in European, also nothing.
No, some weakened. I mean, Europe has weakened a little bit. I think we all know, especially since the luxury stocks.
In the equities market, I'm talking about the credit spreads.
Yeah. No, credit.
Like government debt, like Germany, France, Portugal, Italy. Nothing.
I don't see it. Maybe that's too easy and simplistic by any means.
Is it
but
though?
Just looking at a chart, the only problem will be if equities rally and spreads widen, and that is not the case right
Agreed.
now.
And how do you feel? And how do you feel about discretionaries continuing to outpace staples?
Yeah,
is that too simple, or is that flawed, or is
that
right on?
I love that. That's the best ratio out there. Equally weighted in particular. And equally weighted is paused here. That's okay. Equal weight discretionary by itself has corrected. I'd rather not see that deteriorate any further. But I look at home builders are still strong. And then there are some pockets, they name like Deckers.
Yeah.
They sell Hoka's, my running shoe.
Hoka?
That stock is Hoka, Hoka. Highly recommend.
We were talking about that last week. I was like, what are these Hokas? Okay, running.
Yeah.
They're good running shoes?
They're big. Great running shoes, great walking shoes, great old man shoes for us the dads here, JC.
Well, I mean, I'm not an old man. You might be, but.
So there's little pockets of weakness there, but generally speaking, okay.
Todd, how about interest rates? Where's your head at? Was 5% the peak?
So I have two things on that. A, money still pours into money market funds. Cash. Money market funds took in $63 billion last week. They've taken in $1 trillion over the last year and about $960 billion year to date. That is off the charts of where money's going.
So you're saying that's money that's not going into bonds or treasuries?
Just money. Well, they're going into ultra short duration money market funds, right? Just really, really short-term paper.
And not bonds.
Yeah, not long, especially not long duration. So that is one thing with rates. And I understand it. You're getting 5%. There are a lot of people out there who are really comfortable with that. But I also think it sends a message about current equity market psychology that no one really wants to bother with equities. They're like, I'm getting 5%. Great.
Yeah.
Secondly, I went back and actually, I have it in the slides here somewhere. I think it was on page 7, if you have that open or not. There's a table in there that I went back and looked at mutual fund performance from 1948 to 1980. Right. This was the last big bond bear market, right? Rates went from 1% all the way up to 20%, whatever it was. The key being when rates rose, equities got hammered, kind of like last year, right? But then when rates decline, now this helps in hindsight, obviously knowing what the peak and trough in those rate declines were, equities did really well. Yeah. So what I'm getting at is if the 10-year's off 40 basis points or whatever from the high the other week. Some people say, "Oh, here comes a recession." I no comment on that. Like, I mean,
you've been telling me about this recession since the last recession.
Yeah, 12 out of the last 2 recessions. But if rates were to decline, it's not necessarily a bad thing for stocks. You look at all the averages there: the S&P 500, blended funds, growth funds, value funds, moderate allocation, whatever. Right? Everything did well when rates paused, despite being in a structural bear, if that makes sense. So even if the 10-year came into 4% or whatever, I still think that's pretty constructive for stocks. It shouldn't necessarily be a recession. It's when you get the big spikes like last year, that is when equities do poorly.
And which stocks? Did you do any work on specifically which stocks? Are we talking about things like growth and not really something like energy?
So if I had more data, I would have, but getting stuff into the 50s and 60s is a struggle. So that's why, I was trying to use some of these mutual funds from back in the day. I mean, what they held specifically, I don't know, but at least we have some sort of roadmap to say, well, when rates declined 100 basis points in January 1960 all the way through May 1961, the S&P was up 20%.
Right.
So rates coming off the boil, I still think is pretty constructive. Combined with all the money that's going to money market funds, I think that's a little bit of a constructive backdrop for stocks.
Are you saying that there is cash on the sidelines?
Yeah, there's an insane amount of cash on the sidelines.
How insane of an amount?
Well, money market funds have about $5.5 trillion now. They've grown 25% year over year.
That's bigger than Apple.
Oh, yeah. Oh, yeah. Yeah. $2 trillion of that is in retail money market, and the other 3 is in institutional money market, just to break it up. So, if rates were ever to decline, I like to think that, some of it will stay there inevitably just because of demographics and people are risk averse. I like to think, though, that some of that will make its way back into stocks, whether it's high risk, high beta type stuff or your dividend payers.
It's when it's when there's no cash on the sidelines that is more of the problem historically.
Yeah, that was the 2021 scenario when everybody was in the pool.
I'm not gonna lie. I made a couple of phone calls about maybe getting my own SPAC. And fortunately,
remember SPACs?
Fortunately, my friends are very smart, and they're like, "No, JC,
I told you no."
Do. Right, and I listened, and I didn't launch a SPAC.
I'm glad you didn't.
I am too, but just to show you where sentiment was at the time.
I
made a couple of calls. Everybody had a SPAC. I felt a little left out. I'm not gonna lie.
We're miles away from that environment. Miles and miles away from that type of environment right now. Indeed. The most aggressive anecdotal observation and based on where money is going is short duration cash. And we haven't had that in a long time, which is, I get why, but if we're just trying to say, okay, where's the really aggressive type behavior, it's cash.
Can we throw up slide 2 there, Spencer? I want Mr. Sohn's thoughts. Todd, you're a good thinker. You're a good thinker. And I don't know if you think that this is a long-term uptrend. I tend to lean that way. Call me old-fashioned. Classic trend from the lower left to the upper right. Consolidating over the last couple of years to the point where a lot of investors forgot this sector even existed. Second largest sector in the S&P, largest sector in the Dow. That's out of date. It's actually closer to 21% of the Dow now.
Yeah.
I don't know, kind of a big deal, no?
I mean, it's still an uptrend. It's the most frustrating sector out there because of how inconsistent it's been for on a relative basis for like 6-7 years now. What I think is interesting is that you have names like Lilly and Novo Nordisk, right? Anything that's associated with weight loss are extremely overbought. They've been rewarded. They're strong. And then you have anything in the equipment space is extremely oversold. So I wonder if there's going to be a little bit of mean reversion in the next year. And so, okay, Lilly takes a backseat, Novo takes a backseat, but then that means the rest of the participation, the breadth improves of healthcare, and that should ultimately get it out of this range.
There's so many different things in healthcare too, right? We talk about
it's a very diverse sector. You got boom and bust biotech, except for for Vertex and Regeneron type names, which are good. Managed care, honestly, has always been solid. Took the last year and a half off. And then now these weight loss drugs, which have really entered the mainstream. Maybe a little bit too much. You just read some of these crazy articles out there. So tactically, they're a bit stretched. The equipment names are the ones that, if you want to play mean reversion, are where to look. But I like it better than, say, staples and utilities as a defensive proxy.
Me too.
I just think if I can get 5% treasury yields, I don't necessarily need to try to play the structural change in staples here.
Todd, is UNH a defensive stock?
I think so. You disagree or you agree?
I agree.
Well, then how come during the bull market of the 2000s, it outperformed for most of that? How come during the bull market of the 2010s, it outperformed for most of that? Don't defensive areas underperform in raging bull markets?
It's a good question. I don't know if I have a good answer. I don't know if I have the 2010
so
one.
Nice. Tell him he's full of shit. There's nothing defensive about it.
I look at managed care as defensive because everyone needs managed care.
All right, but UNH don't act that way.
Is United Healthcare an insurance stock?
No.
Basically, yes.
It has a 0.0 weighting in the insurance index, last I checked there, Todd.
Thematic insurance. How
Listen, Todd, can you agree with me that in theory, United Healthcare should be defensive? In practice, it is the opposite.
Stop. Alfonso, grab the chart. Don't let him do it.
I'm looking at the fucking chart. I can draw it for you.
Oh, God.
In theory, yes.
In practice, no. And just like a great philosopher, Yogi Berra, once said, is that in theory, practice and theory are the same, but not in practice.
Interesting. I will say this about healthcare. A lot of money out of healthcare ETFs this year. So folks using that vehicle have left the space, which I like from the contrarian idea. Not necessarily a signal, but if you're just saying, all right, why can I be bullish healthcare? Well, there's been a lot of outflows from XLV and biotech particularly. So another reason why the bar is very low for expectations. And when that happens, it's a good cocktail for future.
United Healthcare, largest component of the Dow Jones Industrial Average.
Largest. You know what the smallest is and should get replaced soon is Walgreens.
How is Walgreens still in the Dow?
It shouldn't be. It's less than 0.5% of weight, and anytime that happens, you get a replacement.
Todd, we're creating a new Dow. Would you like to be on our selection committee?
Yeah.
First of all,
Amazon in there.
Now what?
Sohn is not in our selection committee, but I will allow him to be the first guest for you to pick apart our selections, and we will consider your thoughts. We may not agree or act upon them. That will be up to us, but we will consider them.
I want the spear in there.
He's an advisor to the selection committee.
The spear.
That's true. The advisor to the selection committee, right? You're the assistant to the regional manager.
What is that ticker again?
SPHR. Talking about new Dow. I look, the Dow to me is like a reflection of America.
Isn't that a SPAC? Wasn't that a SPAC? Speaking of SPAC?
It was a spin-off. It was an MSG spin-off.
You're such a New Yorker, dude. Where'd you grow up? In Westchester? Todd, where'd you grow up?
I grew up in Westchester, but I grew up in Westchester, but I've been in the city for 12 years now.
You're such a New Yorker.
But so, I look at the Dow as a reflection of these big American companies, and this is America right here. This is a giant ball.
It's a $1 billion market cap.
Oh, have you seen these videos?
I have seen these videos, but you and I haven't been because we have so many kids. You see.
Yeah, I know. I'm not.
I'll go and take pictures and videos for you guys.
Thank you.
Dude, Fami's already been twice, and he turned down tickets 2 more times.
Isn't it like only you two? Can you see anybody except you two?
Yeah, but Lady Gaga came up and sang a few songs the other day.
What if they get the CMT symposium? I mean,
wow.
Charts on that screen?
Now, if that happens, I'm buying the stock. Could you imagine all the charts?
That'd be great. Chart heaven. All right, Todd, you get one sector into the end of the year. Got like 7 weeks to go here.
It's funny. I think last time we talked, I was thinking energy. Tech. What's wrong with tech? Let's just make it easy.
Good. I like it.
Microsoft is
beast,
powerful.
7% last month, dude.
Apple's correcting fine, and I'm watching some of those semis maybe starting to perk up here a little bit. There's still some soft spots.
Yeah.
And on as extension of that, communications, really a lot of interesting names there too.
You guys want to hear a fun fact?
Please.
Sure. Please.
Yesterday, I'm just double checking the math here. Yesterday was the highest close for tech on a relative basis since April 2000.
I think you have to look. People are making a mistake putting XLK in that ratio. Todd, why don't you speak to this? You're looking at Microsoft and Apple versus.
Yeah, I mean, I do like to equally weight it.
When you're doing,
so you're getting.
But we live in a cap-weighted world, Todd.
No, but when you're analyzing, relative strength, don't you want to use the equal weight version? You don't want to
know. I always like equal weighted just to get the full picture, right?
You know what? I'm gonna take that back by a nose hair. By a nose hair, July the 18th technically was higher for tech.
Let him answer the question.
By like 4 decimal points away, but
it depends on what kind of investor you are. If I'm just a passive person, I see tech at a relative high. I say, okay, I'm good. I'm just going to sit in my SPY. Yeah. If I'm trying to analyze the internals of the market, I do like equally weighted a little bit better. So that way my Microsofts is not skewing my IBMs or Microns and AMDs.
Yeah, but Todd, wouldn't you agree that it's not that one is better or worse than the other. It's just different information. We want to use them both. Yeah. It's not one's better than the other. It's like, oh, do you want to look at countries in their local currency or dollar denominated? The answer is we want to look at them both, right? They're just different information. You want to look at equally weighted or cap weighted? The answer is both, right?
It's different perspectives, and whatever your goals are, passive, active, or tactical, long term, it informs that perspective. And especially in a market cap weighted world where these companies are only going to get bigger, I think, right? The S&P is kind of turning into Korea and Taiwan, where you have these mega cap behemoths that skew the index. And I'm fine with it.
Aren't most countries like that, by the way?
Yeah. Most individual European companies, it's really prevalent in Asia.
Don't countries have caps, though, like Canada? Don't some countries do a better job at capping it?
I mean, some of them will put caps on it, but eventually the index providers are going to have to address this if Apple and Microsoft and Amazon continue to grow and become X trillion-dollar companies. Like, that's just the way this index is going. I don't have a problem with that. It just makes our job actually a little more interesting because we can go.
Yeah, I don't have a problem with that either. Why does that make people so upset?
It's just saying, listen, 5 stocks, 25% of the index. It is what it is.
Yeah, right? And it's way worse in other countries. That's actually pretty diversified. No, I mean, look at Chile, for example, right?
Oh, now you're getting extreme.
Chile, 30% is 2 companies, right? You got Banco de Chile and Sociedad Química y Minera de Chile. That's 30%. You look at Peru. I mean, Peru, you're talking 22% Southern Copper, 21% Credit Corp, right? I mean, these are the country's indexes.
The difference is this is the U.S. This is the largest market in the world. Versus, I don't know.
Sounds like they're doing something right, Todd. Sounds like they're doing. Sounds like something's working.
The only one that's not like this, and it's the most balanced market around, is Japan, and that one still acts really well. I know we're all in tech land and whatnot, but Japan's still pretty good. I like it.
33-year highs.
Yeah. I mean, and if you said, okay, I need a little bit of international exposure, that's my route to go. Don't buy these bulk ETH solutions and all that. Stay with the concentrated funds.
I honestly, I think that's a good perspective versus buying a basket of countries, go individual country. That's actually, I hadn't really quite thought of it exactly like that, but it's a great point.
You think about big asset allocators. They say, okay, I got 70% equity exposure. Of that 70, 60 of it is US, the other 40 is MSCI EFA. I don't love that. It just doesn't work.
No, it doesn't.
Or a little EM. So I'd say I'd rather have EWJ and pick a LATAM country that's doing well. Unbundle.
Do they got those in LATAM? They got those? Mexico?
What's that? Yeah, EWW, right? So I think you have to unbundle, like kind of how you've unbundled cable the last decade. Unbundle your international exposure.
How we've unbundled cable. Why are you showing a chart of shitty IBM?
I couldn't help it. I punched it in when Todd mentioned it. How about that base?
It's IBM to me is, your friend or your boyfriend, girlfriend, whatever it is that you text every once in a while, like, hey, how you doing? And then you guys realize why you're not together.
Okay. Yeah. All right. So you're saying it's never going to materialize into a new uptrend?
I maybe, but I've been here before.
Yeah.
This is the first one we're kicking out of the Dow. Maybe not the first one.
No, it's not
the first one.
Yeah, it's not the first. There's too many bad stocks in the Dow.
Yeah, but it's definitely in the top 10 worst. Top 5 worst.
4.5% dividend yield. Apparently, they're doing things with AI.
I can get 5 on 3-month T-bills and not worry about Watson and if he's going to go.
I mean,
ballistic.
What a bomb that was. I wonder if they're actually ever going to get anything done with AI now.
Probably, but who cares? Right?
It's an under the radar AI play, I guess, but they've also had that for.
Final thought. The fun police is here, Todd. Final thought. What's everybody ignoring, including us? What are we missing completely in this market right now that's got your attention?
Solana.
Doubt it.
No. Oh gosh. I just think the sheer amount of money that is not going to stocks and instead is going to short duration stuff.
What's the big takeaway there? So when
people are scared.
That's a tailwind, no?
Tailwind.
It hypothetically, yes, it should be on the surface. Yes, that everyone is scared of stocks. I think they're scared of volatility and they want their cash. And as you saw earlier in the year, when the S&P ripped after March, some of that money started to come back in. The FOMO effect becomes real whenever this market gets out of the woods.
Todd, you're the flow guy. I am certainly not. Do you look for outflows out of money markets as confirmation of that unwind getting going? And how often does that data get released?
It's weekly. It's every Thursday afternoon. It's a highlight of my week.
Alert.
Not necessarily confirmation, because I will say it's interesting. In the 90s, money market AUM went up with the stock market. But I do think it makes an interesting story that maybe some of that data will come back in.
Interesting.
All right.
Love it.
All right.
Love it.
Todd Sohn, always a pleasure.
Man. Go for a walk, Todd.
I appreciate
you earned
it.
Go for a walk,
Todd,
buddy.
if I were you, I would lock myself in that office and work there for the rest of the day.
We got a Trading Places poster in here. Look at this thing.
Love it. I love that, by the way. Love that. Nice.
Thanks a lot, Todd.
You guys take care.
Adios.
All right.
He's my flow bro.
He's my flow bro too. Yeah, flow bro. For sure.
But seriously, that Strategist office looks like a frat party. I would work in that office if I were him.
He lives on the Upper East Side. How far is that office? It's not far.
I don't know.
Probably Midtown. All right. Let's talk some cloud stocks here. We got Datadog reporting this morning, and they blew it away. Frankly, EPS beat, sales beat, guidance beat. Datadog, one of a dozen cloud stocks up this morning, but this is the driver. So I think it's
25%, dude.
Yeah, 25%. I had to scroll up to find it. It's 25%.
Why are you calling this a cloud stock?
They are they're like data cloud storage. That's what they are. So like Snowflake is up with this, as is like CrowdStrike, as is I haven't looked at Dropbox yet, but I'm assuming that's trading higher.
This is not a cyber stock though. Cloud
is not a cybersecurity.
No, it's cloud, right? So Datadog. I think Datadog Snowflake, and what was the other one that I said? I think those are the two big ones.
That's when you knew it was the top. Like when we're buying stocks like Datadog and Snowflake.
Oh, thank you, MongoDB. Thank you, MongoDB,
and MongoDB for that matter.
Those stocks
we got to be getting long in the tooth.
JC, those stocks were so hot.
They were.
COVID and before.
Yeah.
I mean,
I remember it well. Datadog. That was it. That was the top.
Yeah. All right.
I mean, they just had
this thing's still.
They just had an amazing quarter.
Yeah, great. They're still stuck in the range that they've been in. Great, amazing quarter or not.
Yeah.
Yeah, great. Stocks at 25%, still in this range. You know.
All right, and then the last one we'll do is UBS. It's their first quarter. It's their first whole quarter since they swallowed up Credit Suisse. I'm not sure the number is really comparable at all, but the stock is, or at least last I checked, it was trading higher. Let's check again. It's been a while.
It's up a little bit.
Yeah. Okay. So still up. Okay. Cool. Anyway, thoughts?
If it's above 22, it's still along. That's it. Nothing's changed.
It's a beautiful chart. This is one bank I wouldn't mind buying at all. I'm not buying it. To be clear, but I buy this before a lot of other ones.
Continues to look great. It's quite the leader.
All right.
Even despite the crappy Credit Suisse, doesn't matter. It looks great.
No, the companies that were the purchaser of these assets made out like bandits. We've talked about it on here a bunch, and
that's another example.
That situation was no different. In fact, speaking of free markets overseas, the Swiss government literally went to UBS and was like, "You're buying Credit Suisse, and we're going to make the deal sweet enough so that you're okay with it." Yeah, that's what happened there.
If there are other earnings reports that are on your radar, you want us to talk about them, drop in the chat. I see someone just dropped in Celsius in there. Yeah, that was a very large beat. Its stock is not up a ton this morning. Well, yeah, 7% is not bad, but huge beat for Celsius on their bottom line. Wow, 89 cents versus 46 cents.
So they sell that poison. They sell that poison. That's why their chart looks like about as good as Monsters, who also sells poison.
Yeah, selling poison is a great business.
Fantastic.
Yeah, I'm not exactly sure how. I know there was a whole article that I did not read. I think last week somewhere. I think maybe Bloomberg, about how Celsius sort of came out of nowhere to conquer the energy drink market, because like Red Bull and Monster have owned that space for like decades. I'm not quite sure. It just seemed like 3 years ago, all of a sudden, everyone had Celsius, and I had never heard of it before. So
yeah,
I don't know.
I didn't either. So for a full year, this is how little I knew about the stock. Back in like 2020, 21, I thought this was like a crypto miner. It was trading.
it sounds like it, doesn't it?
I had no idea.
Yeah,
I think these crypto punk people are drinking this stuff.
Oh, so this is the preferred drink of NFT owners?
Yeah, I think so.
Okay. This is
shit's
hot in the metaverse.
Yeah, it's so hot right now.
Speaking of which,
the hot corner was wild today, bro.
Popped off.
Dude, can you throw up slide 2 quickly, just so people can get some perspective on this beast?
Oh no, Ryan, that was not Celsius. That was a stock called Celestica, which is a supply chain management company, a little mid cap. Sounds the same, not the same.
Look at this bass. Look at this thing. Wow. Amazing.
Yeah.
What a great stock.
Yeah, I mean, stock market Mike makes a good point. Historically, yes, these vice products do very well, but lately, find me a good-looking chart of anybody who's in the alcohol or spirits business or tobacco. Those charts have just been disasters for a long time now. This one looks a lot different. This is some bull market poison.
Bull market poison.
Cigarettes are staples. I'm not quite sure what Celsius is classified as. Probably
staple.
Not.
If Monster is a staple, then they better be.
Staple of some people's diets, I guess.
Yeah, consumer non-durable beverage. Yeah.
All right.
So the Morris International keeps hovering up near new highs. Doesn't look terrible. Don't be hating on cigarette companies.
Look at these stocks on a relative basis. Philip Morris,
they kill people as good as anybody else. All right, they're killing people faster than Celsius.
I don't know what you're looking at your chart upside down. Philip Morris is like laying around on multi-year lows here. Massive.
Zoom out, young lad.
What are you talking about? It's a terrible looking chart.
All right.
Aren't there two?
Yeah.
Yeah, they spun off
Altria and Philip Morris International.
They split international and U.S.
Doesn't look terrible. Looks better than most staples.
People still smoke a lot of cigarettes.
Asia and Europe in particular, less in America.
Yep, totally.
Latin America too. They're smoking a lot.
All right, should we do hot corner?
Hell yeah! What the hell happened in this hot corner? Wow.
Let's find out.
Big purchase.
Hot corner. So hot right now.
Dude, what happened?
Earnings.
Yeah, I was gonna say companies coming out of earnings season and they can actually buy now. So
is that what it is? So what about this president and CEO and director dropping $6 million?
No, two people: president, CEO, and the director.
Got it.
But it stands out. Throw up the chart, Fonz. Let's talk about Sarepta here. Listen, this one has already had like a ridiculous bounce off the lows. I have the filings here. Give me 1 second. I'm curious, like where exactly these guys purchased, right? Because if we zoomed in, I should have included a daily, right?
But Cambridge, Mass. They got the smart kids.
That's where all of the good biotechs are, my friend. So if you look just at the past like 6 days of price action here, this stock has rebounded significantly off its lows from just earlier this month. So almost 50%, and a little over a week here. These insiders bought at, so stocks trading at 81.50 today, was as low as 56 about a week ago. These guys are buying pretty much at current prices. So 78.80 for the director buyer. And yeah, from 78.50 all the way up to like 81.25 for the president and CEO. So, you know, it's easy to say the stock's already moved too much. These guys are buying it right here where it's trading today. So that's interesting. And they're monster purchases. You know, you would have think the better time would have been to come out and buy it when it got absolutely killed, down 37% on Halloween. But they waited for whatever reason. It definitely stands out.
Chimera.
It just stands out in terms of size, this purchase, right? You got two insiders, one's the CEO, and big size. You're talking about the other biotech purchase?
Yeah, KYMR. How big was that purchase? This is serious.
5.3, but doesn't look as good.
$5.3 million on a biotech that's less than $1 million in market cap. Like that's some serious cha-cha.
What are you talking about? It's 858 million in market cap.
Right, less than $1 billion. Sorry, what did I say?
So I guess you could play it off of those lows from 2022. What, call it like $14?
Yeah, that's exactly right.
I would rather be in something like Sarepta. I don't know. I listen. I wouldn't like to be in either of these. Is the truth. Look at the way Sarepta trades. Like if you're interested in like dabbling in a stock like this, just pull up a daily chart and just look at all those gaps, and then look at like how much the stock was up or down. That's a weekly, so it's not going to show the gaps as nicely. But this stock is just way too gappy, like 30, 50% at a time. Wake up in the morning, totally blown out of your position.
Well, it's a one. We talked about this last week. It's a one-trick pony. They have one drug for Duchenne muscular dystrophy, and it had disappointing results. So any headline related to that drug is going to cause a 20-30% move, right? So
what do you think? Above 13?
No, but that was Sarepta. Yeah. Now we're going back and forth.
14, 13, $14.
Wait, what are you talking about?
You're talking about Sarepta, so was I. He's talking about buying this dumpster fire in Chimera.
Oh.
I'm not buying anything. El Deuterino just dropped $5 million on this guy. I'm just saying.
I bring the charts that look good, and that's it. I ignore these crap charts. So let's look at Blackstone Minerals, because this one looks really nice. It's been basing for 10 years now. Monster base. 1950. That's your level. Chairman and CEO. Gotta love it. He's anticipating a breakout. Been waiting for this one.
You think he's got a technician by his side?
Maybe.
Looks great. This thing looks great. Look at this thing. So oil and gas, Houston, right?
Yeah. E&P. Shit.
Those were the biggest purchases. What about this software? RELY. Remitly again.
Hold on. 10.5% yield. 10.5% yield. There are some crazy dividend paying stocks in energy right now. If you're into that kind of thing, you could go crazy on some of these names. Looks good, but you're going to get a K1. So not for everybody.
Not for everybody. Wow. IMAX. IMAX is still around?
Yeah.
Is this really E&P?
Yeah.
No, it's got to be transportation.
Which one?
No, exploration. You don't see dividends that high from the explorers. Very rarely, right? Typically, it's the midstream operators.
And not from an explorer doing this well either, right? Like maybe if the stock got destroyed, that the yield is so high, but this ain't that. Right?
Yeah, there's a lot to like here. But again, like the K1.
What this dude was like, right? The chairman and CEO. He's like, there's a lot to like here. I'm going to buy $1 million worth of it.
Duderino's like, I'm jonesing for a breakout. Let's go.
It's true.
Okay, that's all I got on the hot corner.
That's a lot. I mean, the hot corner was packed. Throw it one more time. Throw up the table one more time, just so you can see how long the hot corner was. Big transactions. Big money.
They're even buying Match.com. This piece of garbage.
Hot garbage. Who is this guy? Glenn Schiffman.
Wait, why does that name ring a bell?
Glenn Schiffman?
Yeah. Hold on. Oh, it's because he's the old CFO. That's why.
You memorize names of.
I was gonna say, how the hell do you know that?
Of software.
No, the reason that name rings a bell is because Schiffman is my mom's maiden name, but she's not related to this guy. But whenever I see a Schiffman in the wild, I just sort of remember, right? So
valid reason to remember the name. That's fair. All right.
Yeah.
Nathan Zam with some great info in the chat. Thanks, Nathan. That clears some things up. Makes a lot more sense. So it's a royalty company. So they're simply investing in projects, helping capitalize other explorers in their drilling and oil exploration projects, and then they take a piece on the back end.
Can we do a little chart report?
I was going to say, why don't you do a quick rundown of the market?
Yeah, we'll do a quick rundown. We'll do the chart report. All right, so Dow futures down 60 points, which is about 20 basis points. S&P down 10 handles, about the same, 20 basis points. NASDAQ 100 futures up slightly, basically flat on the morning. Bond futures on the 30-year up a full percent. Wow. Gold getting hit down 1%. Silver down 2.6%. Copper down 1.6%. Oil down 2.6%, and the dollar inching higher with the euro and yen falling this morning, with volatility slightly up a point on the VIX, and yields down about 1.3% on the 10-year yield, down to about 4.6% this morning. And that is your morning rundown.
Brought to you by the chart report.
Hit it.
Which we'll look at right now. Funny how that works out.
I want to scroll down to Renmac. Jeff DeGraff is in my Mount Rushmore of best technicians on the planet. Best technicians of all time, I would argue. This is an interesting one. He's talking about how even factors have their seasonal trends. And historically, high beta outperforms low beta in November and December. And we are in those months. So that's interesting, right?
So just tech is essentially what he's saying.
Nope, that's not at all what he's saying, actually. He's saying specifically that high beta outperforms low beta. So no,
Yeah,
he didn't even mention technology, as a matter of fact.
But isn't tech classified as high beta, right?
The high beta index has 40% tech. So there's a lot of tech, but there's also a lot of consumer discretionary. There's financials. You have communications.
All right.
Yep. There's others. When you look at the top when you look at the top sectors, you have a lot of stocks that are not in the technology sector. A lot of consumer discretionary, like Caesars, for example, is one of the top components. Meta is a top component. Yeah.
So all this chart really,
so
all this chart really shows me is that throughout the year, high beta and low beta look like they're relatively equal, like throughout the year.
Yeah, right? What stands out is now, right?
Sure.
The S&P 500 tends to do well through January, doesn't correct until February, but that high beta starts to rotate out in January. It's really the November-December period that is really strong.
Yeah. All right. Interesting.
JC, don't look now, but dollar back and out of the box.
Which box is that?
Rounding bottom formation.
The rounding bottom formation that started, in January or something?
Yeah.
Yeah, listen, Ian published it yesterday, the chart of the U.S. dollar index. I don't necessarily know that there's a more important chart in the world right now. Did anybody mention it on the old chart report?
I don't believe so. I don't remember seeing any dollar charts. Let's take a quick look. No, a lot of S&P stuff.
A lot of breath thrust.
Yeah.
Charts.
Yep. Oh, there's a Microsoft chart.
We thrusting.
Russo likes the thrusts.
Breath thrust Twitter alive and well out here.
Wow, so much breath thrust Twitter. Who knew?
I didn't tweet.
Rob Anderson, scroll down to the bottom. Rob Anderson of Ned Davis. We're huge fans of Ned Davis. S&P 500 returns in 2023 have been driven by its largest constituents, which is not uncommon for cap-weighted indexes.
Crazy to think.
So the best players are scoring a lot of points, huh?
I mean, this is
like last night when Miami beat the Lakers last night. LeBron led the team in points for the Lakers.
Only 28% of the S&P stocks outperform the S&P, but
which is about right. About 30% of S&P stocks historically outperform S&Ps, so that's pretty much right on par.
But stop, it's math, right? Like they're not saying anything.
Sure. Yes. Obviously, it's an average, right? So yes, of course.
No, but it's not equal weighted. Like the Magnificent Seven make up like almost 50% of this index.
I know.
So
I know.
Yeah, of course the S&P is going to do well, and obviously the largest weightings will have the highest attribution rates. In other words, they will be the ones driving because they're the largest weightings.
And I want to bring up a point that we kind of feel like just talked over too quickly with Todd because we had so much to talk about, is the fact that the biggest names, the biggest components in the index can mask underlying weakness in the index, but can also mask underlying strength in the index, right? It works both ways. I feel like people only be like, oh, it's only the 7. It also hides the strength that's going on in the rest of the stocks as well, which we've also often seen throughout history. It works both ways.
Hey, look at this comment in the chat right now. Do we got to get our boy John back on the show?
John Kolovos says that the Zweig thrust is flawed. Can you let the man, like, can you just rest in peace?
Wow.
Hating on Marty, bro.
Shots fired.
Low.
Hey, wow.
Low. Too soon.
All right, we got to bring John back. We'll talk about that.
Yeah, we'll bring him back. And I'll break his balls. Hating on Marty Zweig like that.
Patrick loves Marty Zweig.
How do you not? The Zweig. For me, it's less about the Zweig thrust or the Whaley or the Strazza thrust, or it's more about the fact that all these thrusts are showing up at the same time is really what it is. And we've said this before. We've literally said those exact words before. So that's how I look at it. It's less about Marty or Whaley or whoever.
Yep.
Ed Davis thrust. I'm sure he has a few, right?
It's fun. It's fun. Make a thrust indicator.
Well, the thrust from Ned Davis. That's a good quote.
Spencer, exactly how much Bitcoin do you own?
Me?
Yeah.
So every year I sort of do a review of my everything, finances, investments, and so as of the end of last year, I think like 0.8% of my net worth was in crypto, right? So a negligible amount.
So why?
I don't know. but yeah, no. I mean, I own like a shit ton of. I have like a shit ton of stocks, right? That's most of my net worth is in equities. And yeah, I've got. It's like I want to have some skin in the game, but I guess maybe I'm just not confident enough in the asset class to have more. I don't know. I don't have a good answer for that really as to why I don't. But yeah, it was like less than 1% of my net worth is in crypto, and that's even that is divided up into Bitcoin, Ethereum, and Solana. So it gets even smaller from there. But
yeah, one mistake I made in past cycles was owning too many alts and not enough Bitcoin relative to the alts. I think.
Here.
I think there's a time and a place.
Yeah.
I think you trade the alts through the bull markets and you buy and hold the Bitcoin and the Ethereum, and if you want to throw in a Solana or something, maybe.
I think there's a time and a place. I don't think you could just you can't just blanket statement like that for all cycles. I think there's a time and a place.
So here, I'll actually tell you. As of the end of the last year, so we're we're 11 months out. 0.4% of my net worth was in crypto as of the end of last year. But of course, crypto has gone up since then. So
And how much is in Disney?
I don't do it by by that. I don't know. Probably roughly. I own probably roughly as much Disney as I do crypto. They're probably roughly the same. I'll be honest.
That's no good. That's probably no good.
Yeah. So,
JC, exactly how many NFTs do you own?
I don't know, like 100 maybe.
Oh my God, you've been acting.
Well, no, because I own a CryptoPunk, I get sent NFTs all the time.
And so it's like NFT dividends.
Yeah, that's actually exactly what it is. Yeah, it's true.
Seriously,
great. And some of these are worth a lot. Like the other day, I got airdropped like a ticket for some game or something like that. I sold it for $3,000.
What was the max?
Well, that's the use case. That right there is like that's what they always said was NFTs can be your entry into an event, a party, a game, whatever.
Yeah, and what's great is that because it's in the public blockchain, people know that I own that. So they, for example, like it would be divulging that if Strazza collected wine, let's just say, and his wine is on the blockchain, I know that Strazza loves Cabernet Sauvignon. I could send Strazza a Cabernet Sauvignon because I know he's into it and I want to show him mine because I think he'll like it, right? Like that's what's really, really interesting about the blockchain and where I think that we go into the future. Like when the tickets, like when sporting event tickets are on the blockchain and the Miami Dolphins can see that, I have all these Dolphin tickets from all different stadiums around the country in my wallet, the Dolphins can send me something like, hey, we'll give you a discount on season tickets or whatever. You know what I mean? Like from a marketing standpoint, it's information. It's like the new email address in one day. Who knows how long it'll take, but
maybe we'll see.
It's all a public ledger. So it's just really interesting. Like you get to see people's habits. You would know that, every Monday I order ribeyes, so, maybe on Sundays you could send me an alert, be like, hey, buy your ribeye for tomorrow from here instead,
Yeah.
I don't hate it. We'll see. I don't think, I think that's a very, very long time from now. That world.
Maybe. I have no idea. It's above my pay grade.
What I do like right now is the daily candle in Uber.
Yeah. Someone just mentioned they turned
the daily candle in Uber. The market opened 20 minutes ago.
Also, Spencer, we talked
for today.
Yeah. Let's get me a Disney chart. Spencer, we talked about this level a lot because we talk about Disney a lot on here because you're a big, big, big shareholder and big Disney fan, I think, right?
I'm a huge whale. When I buy Disney, it shows up as a Form 4. So, I mean, it's huge.
You're a big
Have you seen the Tinkerbell movie? The Tinkerbell movie was pretty good.
No. Casey's losing his mind over here watching too much.
No.
You haven't seen the Tinkerbell movie?
But seriously,
no. My TV and movie viewing is basically at a crash all time low because I don't have a TV hooked up right now. So
Oh,
I'm not watching anything at the moment.
Can you throw up slide 2? You're better off that way. TV is poison.
I love TV.
Yeah.
So this 84 level in Disney, we've talked about before.
Yeah, we have.
Doesn't want to break down from this giant top. And if you threw up RSI on either a daily or a weekly basis, some solid looking divergences in place. I mean, Disney hasn't been oversold even on a daily basis since March. As bad as the price chart looks, momentum has really been like thawing out here. I think, this is very playable if we're above this, low 80 level.
Go to the next one, Spencer.
Oh man.
Disney is in play. Do we keep it in the Dow, JC? Do we give it the boot? Do we use 84? If it's got to hold 84 if it wants to stay in the Dow. Disney completes this top. See ya.
I don't know.
Not my Dow.
These Republicans are very upset about what's going on there.
They're upset about a lot of things. I think Disney, like, if they can successfully offload ESPN, that would be a huge tailwind for them, because ESPN has sort of been a drag on them for it's like a necessary evil for them right now. But if they can offload that to, I don't know, private equity or something, that would help a lot. So
I'm going to Disney in a month. Pretty stoked. First time going with kids.
Oh, you have kids?
Yeah.
3 of them.
Shit.
Wait, JC, do you know which parks you're hitting? Or have you?
I think we're gonna do Magic Kingdom during the day, and we're gonna do Animal Kingdom, and then at night, after the kids go to sleep, I think my wife and I are gonna hit Epcot for some booze.
Yeah, I love Animal Kingdom. Great time.
Yeah, we like zoos around here. We go to the Cape May Zoo.
Yeah, JC, big fan of the zoo. Big zoo guy.
Dude, my daughter knows all her animals. I picked up a figurine the other day, and I was like, "Oh, is this a tiger?" She goes, "No, Daddy, it's a cheetah." I'm like, "Oh shit, okay, my bad."
Smart kid.
All right. What else jumps out to me as far as movers here today? Oh, freaking Planet Fitness! Oh my goodness, 16% gain today on their earnings.
Still go to the gym. So
Fitness.
People still go to the gym.
In this
yeah,
economy?
man. Planet Fitness. I mentioned MongoDB. Thank you very much, Datadog, for that one. On the downside, so much biotech. Oh my goodness gracious. And pharma. Oh, it's all biotech. Oh, and then CNH is down 10%. I think they had earnings.
Biotechs are up almost 1% today.
No, but there's, I mean, on the down filters, you got a lot of random biotech and healthcare.
The biggest mover lists in both directions are usually just flooded with biotechs.
Yeah, that's probably,
a lot of times. Yeah, you have to like kind of look past it. CNH, like I said, down 10%. Melco Resorts, that's a REIT, right? Down 11%. Sonos down 8%. I hate that company.
Why do you hate Sonos?
Because I had a bad experience once where I show up to work at 6 a.m. and the office is empty, but the lights are on and the Sonos is blasting at full volume, and because it was still connected to someone who had gone home, and I couldn't turn it off for 2 hours, so I just had like heavy metal music just blasting for 2 hours in the office, and I couldn't do anything about it because I wasn't connected to Sonos. So after that, I decided I hate Sonos. But
you could just unplug the speaker out of the wall, right?
No, they were in the ceiling. I couldn't actually.
Oh, that's annoying.
So, yeah.
Yeah, right. Rachel, hate is such a strong word.
All right. Should we? What else? I think we covered everything here. I think we
did. This is a good show. Good show all around. Todd Sohn, one of my favorite guests. So
let's,
good.
Let's
hit it, baby. Hit it.
And then we can hop off here.
Hit it. All right, so there are some of us around here in the morning show that are on the Perlman program and trying to stay healthy so that we can live long enough to take care of our kids. Have kids, right?
Talking about me.
And so one of my hacks that I learned over the last couple of months. I used to have an issue. I would eat my steaks. I wouldn't have any carbs or anything like that, and I would still be hungry. Like I was just wasn't fulfilled. Like I needed some kind of like, something salty, crunchy, and that was like an issue of mine. But I'm at the butcher and I'm talking with the girl, and she's like, "Oh yeah, take the gorgonzola, mix it with the butter, chop up some herbs, and put that on the steak." And I said, "Okay." I went home. Let me tell you guys something. You go half gorgonzola, and if you like it extra funky, I like a good funk, but like some people really like that stinky funk. I'm somewhere in the middle, so I go gorgonzola. If you like it stinkier, you can go full blue. Or if you really want to go full send, go with the Roquefort, right? That's extra stinky. So I go gorgonzola, 50-50 gorgonzola and butter, right? Mix it in there and then chop up some herbs. I like a little thyme. If you got some sage in there, rosemary, chop it up real fine, get it in there. And then, when you take the steaks off the grill while you're letting it rest, put the herb butter on top of that with the gorgonzola, cover it so that it could steam in there nicely in the aluminum foil.
And this fills you up different. This fills you up though. That's my question.
Much more so, right? Because the cheese and the butter is very satiating, right? That you're getting that fat as opposed to like a super lean steak. Not that the ribeye is. And then the one thing that I did last night that just sends it to a whole nother level: fresh garlic in the herb butter.
Oh, in the butter.
Fresh garlic.
Too bougie for me. Way too bougie for me.
There's nothing bougie about it.
You ever, when you're cooking
household items,
you ever, when you're cooking a fillet or ribeye, just cut up the garlic and literally pop them right into the steaks?
First of all, I don't eat fillet because I like flavor.
All right, your ribeye. Okay.
I don't do that. I do that with my fish. I'm making bronzino tonight, and I will do that. I will put the fresh garlic, sliced pieces, chunks.
I got steak in the slow cooker right now, having tacos tonight.
Oh, very nice.
Very nice.
My recess is this might be my favorite sports week of the year. Frankly, it's the start of college basketball season. I am a huge college basketball fan. Went to the University of Maryland. Love my Terps. Their first game was tonight. I love college basketball. It's back. I'm excited. I'm watching games like as much as I can, right? And it's my favorite sport. So love college ball. So excited it's back. Can't wait. March Madness is the best sporting event on the calendar, and we get to enjoy it. So
I'm with you, Spencer.
That's what I got.
Probably my second favorite sport, NCAA basketball.
Love it.
Who's favorite to win it all this year? Are my Huskies going to win again?
Standard
probably not. It's a pretty standard favorites. They're looking at Duke and Kansas and then those guys. But pretty standard fare on that front. But maybe Purdue a little bit here and there. I don't know. I'm so excited.
Jalil Bethea is the best recruit ever to commit to the University of Miami. Kid plays down here in Philly, less than an hour from me. So I'm going with Jay Woods to watch him play against St. Joe's Prep, which is where Jay Woods, floor governor of the New York Stock Exchange, good friend of ours. Get him back on the show, by the way. So him and I are going because Bethea plays for like Wood something. It's like in the suburbs of Philly, but he's going to play St. Joe's Prep. And we're going in January to go watch future Miami Hurricanes star.
I don't know how much you pay attention, but did they lose like any or many players? Because they were good last year.
They'll be back. Yep, they'll be back. They're getting actual good recruits now because they go to the Final Four and shit.
They went to the
Final Four. How that happens?
They went to the Final Four. They went to the Final Four one time.
Right, but that's a big deal. Sentiment follows price, right? Not just in the market, but in recruiting. Like if a team is good, people want to go there.
Okay.
Right? Hello, you're a UConn fan. You know how it works.
I'm rooting for them. But you can't really compare Miami's basketball program to UConn's. They're very different.
UConn's football program to Miami's. You can't compare any program in UConn other than basketball. Besides, women's sports dominate Connecticut sports anyway. So
you listen, as good as the women are, fine, that's great. They're by far the best to ever play NCAA women's basketball.
And the men will always be second best.
No, the men are already one of the most storied dynasties in NCAA basketball history.
It's a women's basketball school. We can move on.
You have like a handful of teams that have more national championships at this point. So you just facts. We're just talking about facts here. One of the best programs ever.
Facts only.
Facts only.
I got back-to-back home runs hit off me at UConn, by the way. One of them still
there
going.
You go. All right. Hey, we got Chart Request Live, 1 o'clock today with JC and myself. We'll see you guys there. And after that, we'll see you all tomorrow morning. Thank you to our guest today, Todd Sohn. Thanks to all of you in the chat. Hit that like button, subscribe, follow us on all the socials. We'd appreciate that very much. And have a good day. Go make some money, all right?
Twitter Spaces, 11 o'clock, everybody.
Spaces at 11 o'clock on the Chart Report. See you guys there.
Adios.
Bye.
I can't take no loss. I don't even know what it costs.